Hello, you're watching 5 ways to save on your crypto taxes. 7 ways to save on your crypto taxes. But that is a good segue into number 1, which is move. Every country and every division within that country has its own tax laws. In the United States, these states don't have any income tax. Texas, Nevada, Washington, Wyoming, South Dakota, Alaska, Florida, New Hampshire, up there in the corner, and Tennessee, and also some territories like Puerto Rico. But there's very specific rules about what exempts you from state income tax. And in either case, you're on the hook for federal tax. Even if you move to another country, if you maintain your citizenship in America, you might end up getting double taxed in each country. So make sure to talk to your financial advisor. And that's true of any of these things. I'm not a tax professional. This is just the information I've gained from speaking with 3 CPAs, 1 specializing in crypto and 1 enrolled agent. Okay, so you can move to Portugal, Denmark, or Singapore, each with its own specific savings for crypto taxes. Denmark is 2021 only, Singapore's capital gains exempt, and Portugal currently is fully exempt from crypto taxes. But again, tax laws are very complicated and might change depending where you're moving from or to. So again, consult your financial advisor or tax professional. Cannot say that enough. All right, let's get into the rest of the list. Here is number 2. Time your sells. When you sell a cryptocurrency, the US government treats it as property. And we'll talk about how that affects how long you hold it. But for now, when you sell is what we're going to talk about. If you sell on December 31st of a year, you owe taxes that very next year. If you sell on January 1st, you don't have to reconcile those taxes until the next year, if you're talking about personal taxes. Corporations have different rules, of course. So, if you sell January 1st and then place your money into a DeFi, depending how risky you want to be, you could do it on something like a Pancake Swap or a Viper Swap for high returns, or even place it into something like Celsius, BlockFi, which give 9 to 10% return on stable coins, so you're not even risking anything there. Or something like US Terra, which gives 20%, but it is an algorithmic stablecoin, so a little bit more risk there. Doing that, you can earn 10% APR or more over the course of that year, and you don't owe taxes on that money until the following year. That allows you to use your money to earn back some of what you'll be taxed on in the first place. Number 3, hold your money for over a year. Cryptocurrency is considered a property currently by the US government, which means if you hold it for over 1 year, you qualify for long-term capital gains, which are a much lower tax rate than short-term capital gains or regular income. Now, this doesn't apply to things like staking income or anything else you earn in DeFi. That's normal income. But the original asset, if you hold it for over a year, it uses much lower tax brackets nationally, and in some cases, like New Hampshire and Tennessee, might exclude you entirely from state charges. Every year, the government determines tax brackets based on how much income you made for that year. As you can see here, currently for a married couple, it's $83,550 to move up from the 12% bracket to the 22% bracket. That's a 10% jump. If you're cashing out the max amount of money there, that's a good chunk of change. So, what you want to do is get into the lower bracket. Here's an example using a single individual filing taxes alone. Currently, the bracket for 22% is up to $89,075. So let's say you made a salary of $91,000 or sold a crypto asset with a profit of $91,000 in that year that you're calculating taxes for. Now, it'd be a shame to have to pay that extra percent of tax just because you were a few $1,000s over, or not even. So you could donate $2,000, and that would be a tax write-off, which means it lowers the amount that you made in total according to the government. Therefore, not only do you not have to pay taxes on that $2,000, but you'll have less taxes overall, in this case 2% less, on all the rest of your money. But what if you wanted to get an even lower bracket to maximize your money? We'll talk about ways to do that in the next few tips. As much as I love cryptocurrency, traditional retirement and tax-free funds have their place as well. Now, you can talk to any financial advisor or even find a lot of description about these accounts on YouTube, individually depending what you need. So I'm just going to do a run-through of ones available so you know what to look for. These types are the solo 401k or solo SEP IRA, which allows you to put $50,000 or $57,000 respectively into pre-tax money. So in the previous example, that would actually lower you from the 22% tax bracket to the 12% tax bracket, even though you still have made enough money to save for the future. There's also an HSA, or a health savings account, which lets you put $3.6 thousand in per year. For 2021, that is. These numbers go up each year, so make sure you Google it or ask your tax person. There's also a traditional IRA, let's let you put $6,000 into it. And if you're investing in real estate, look up something called the 1031 exchange. It allows you to borrow versus your real estate assets to buy more real estate assets tax-free. Tip number 6, start a business. This might seem obvious, but there's so many different factors when determining what business to start. For example, you could start a nonprofit. It's going to be very complicated. You could start an S-corp, you can start a sole proprietorship, etc. But no matter which one you choose, here's some tips and tricks you can use to maximize. For instance, say you buy a car for your business. You can deduct up to $25,000 of the cost, as well as depreciation versus the entire value of that car, or if you lease it as well. But the government has suspicions that if you buy, say, a Lamborghini, you're probably not really using it for work. So one of the guidelines they use is that the car must weigh over 6,000 pounds. There's already some SUVs that are like that. So you could buy a Honda Pilot, for instance, an Infiniti QX80, a Jeep Grand Cherokee, and then you can use them mostly for work, and it'll be a lot easier to file the paperwork. The next thing you should know is that since the government considers cryptocurrency a property, when you sell it in order to buy real estate, that's another property, and you owe money on the taxes gained. Sure, you can take depreciation of 1/40th of the building value over the years. But if you made, say, $500,000 that year, you're still going to lose about half of it. So, one thing you can do is if you start a business with a lease instead, you can deduct the full cost of that lease. Maybe it's a franchise, like a Taco Bell or an Olive Garden. Actually, I don't know if Olive Garden is a franchise, but pick your big franchise restaurant. Any money that you put into that, buying dishes, training employees, etc., will come right off the top of those taxes. And then you can make that money back over time by running a successful business. Obviously, that requires a lot of work, but hey, it's an opportunity that most would love to have. Another option for business is something passive, maybe Bitcoin ATMs or vending machines have been recommended to me. Hey, if you have a better idea than those, please share. Everyone's always looking for passive income. Unfortunately, you can't do something like DeFi because those don't have an operating cost to start up, so you wouldn't be able to deduct versus that cost. All right, number 7 coming in. Just making sure you're awake. This one is very important, and I think it's the number one thing that extremely wealthy people do to help build wealth, and it is borrow money. I know it sounds counterintuitive. We're not talking about credit card debt, which we're all used to having. I'm saying, say you bought a coin like Shiba Inu a year ago, and you've 250 extra, whatever it was. So now you've got $2 million worth of Shiba Inu. Now, what we might want to do is cash that money out. You lose half the taxes, and you go on your way. You have $1 million. You count your blessings. But what a super wealthy person would do is leave that money in Shiba Inu and borrow versus the value of it. Now, I don't know any sites that currently take Shiba Inu, but I think it's only a matter of time, as well as that project is going. But you can go to Celsius.network or BlockFi, and they allow you to borrow against Bitcoin, Ethereum, ADA, a lot of the top coins, for as low as 1% on Celsius and 4.25% on BlockFi. So when you borrow that money, it doesn't count as income since you technically haven't sold the asset. Therefore, you can take that money tax-free and use it to put a down payment on real estate or maybe a rental property. Or you could put it into DeFi. As we talked earlier, you can use an algorithmic stablecoin like Terra on Anchor Protocol to earn 20% on your money. Or right on those same networks, Celsius and BlockFi, you can earn up to 10% on BUSD, USDC, or USDT. Very popular stablecoins, which if you do the math, that's more than 1% or 4.25%. So over time, you're actually gaining money by borrowing. That's all. I hope those tips helped you, and definitely make sure to bring them up to whoever your tax person is. Or if you do them yourself, make sure to research well or talk to a financial advisor ahead of time. You don't want to mess it up. Thanks for watching. Join the Telegram group down below if you want to get more tips like this on the daily, as well as stay up to date on new series we're doing, what coins we're buying, etc. And, hit subscribe because you made it this far in the video, so you probably like it. Take care. Appreciate you so much for listening.